There's a gold crash coming. Let's kick off part 2 of the chart show where we've got metals, miners, dollars, and bonds. Here we've got GLD, the gold ETF. We'll start it off with the momentum analysis. We've got the relative strength indicator still above 40, so it's key. But you'll notice now it's coming back down. And we've seen this happen before. You can see back in mid-November, the RSI came down, actually got below 40, pretty close there, and then rallied back and went on a nice run. But could this be the end of gold? Well, let's take a look at the MACD, the moving average crossover divergence strategy. What are we looking for now is to see the black line, the MACD, crossing downward through the signal line. And we can see that here. It's happened before, and it hasn't really slowed down the trend. It's just been a mild pullback. So maybe we're about to see just a bit of a pullback from gold and then another stage run higher. Well, let's keep going because we've already now got 2 confirming signals out of 3. The new version of Momentum Timer Pro version 6 looks at the MACD, the RSI, and its own proprietary signal. Gets 2 out of 3, you get a buy signal. Otherwise, you see a sell, and it makes it just as simple. You get the report every morning, and it tells you what to buy, and all you got to do is set your stops and go. I'll put a link in the corner of the description below. Let's go on to the longer-term trend indicators. Maybe we're just going to see a short-term pullback on gold. Maybe there's just that's it. So let's take a look at the longer-term trends, see if they're still intact. Price across the moving averages are bullish, means they're trending higher. Momentum's building. That means price is moving faster at a faster rate. It's just below the 21-day moving average. So that's not really a big deal. Remember, the 50 is really critical, and even the 100 can be another sign of strong support. All the other momentum indicators for gold are positive. So let's take a look at the ETF, or at gold itself. Moving away from the ETF, we get the same signals on that, but notice here we are below the 21-day moving average. So that's pretty interesting. You see here this volume profile on the 6-month chart is well below. It's still down here around 1800. So there's plenty of support from a price perspective. The question is this move up now over and something we're going to see like we did perhaps a couple years ago, where it just ends up going lower, lower, and lower, and that was a blow off top. Now it's entirely possible because again, if we move out, we see that volume profile line. But let's zoom in to the 10-day, and this is where you get a perspective where you see those sellers. You'll notice all the heavy volume on the 10-day was at 1987. So again, indicating that sellers here are above current price. That's not good. Now you do have a lot of support here at 1900. So there's some good news. So perhaps gold is just going to see maybe a mild pullback into 1900 on the 30-day chart, and that would be fine because everything else now is either above or well below down here at 1800. So again, a move down to 1900 potentially possible before another leg higher. Below that, you've got support down here at 1860. Of course, if you're trading this, all it tells you is you got to tighten up your stops and see and hang on to see if it goes higher, or if you get stopped out, look for a re-entry point. How about we move on to GDX, the miners? So remember, miners tend to lead the metal, although we see the metal, in this case, lead the miners. So maybe we'll get a different perspective here. Got strong RSI, momentum above 40, sitting at 59.45. So that's a strong trend. It meant overbought. Remember, we've talked about this, that just because something's overbought doesn't mean it's all the way over. And the RSI doesn't give us the full picture, which is why you've got to use more than one indicator. So remember, back in late September, went oversold, and then it's kind of steadily gone on a rally here now and headed higher. But is this it? Well, let's take a look at the MACD. We see kind of a soft crossover from the MACD line moving through the signal line. We've seen that before, and sometimes it leads to just a mild pullback as we see here, other times a larger one. So there's no red flag sitting here on the MACD. How about Momentum Timer Pro? Well, it must agree with the RSI, 28 days consecutive buy signals. And so what is that telling you if you're trading this? Well, it just tells you, kind of maybe tighten up your stops or put on a trailing stop, something like that, so that way you can still play in it, but not have a ton of risk exposure to the downside. How about price? Bullish across all the moving averages. They're trending higher. Momentum is bullish on this, is great. Only below the 9-day moving average, and that is a good place for the miners to be. When you've got all these things moving for you, that's positive. So let's take a look here and see what's going on. Because if we move out to, say, the 2-year chart, we talked about how you're going to run into resistance right here at around 39. And certainly price did. We shouldn't have been surprised by that. It came down and it held the 21-day moving average and bounced off of that. So that's good. When you get a cross of a moving average and a confirmation, it rides it higher. Now, the 50-day is a lot lower, and that's potentially the risk here for GDX, is at some point, price could roll down and play catch up with the 50-day, because it's going to need to reconfirm that. I mean, we can go back at prior trends and see where price rallies up, comes down, hits the 50-day and reconfirms it, and then goes. So really, we need to see that. And where could that happen? Very easily here at the $34 price range. So again, all we're seeing here is if you're trading this, tighten up your stops. At some point that signal is going to break, and maybe it goes lower, maybe it goes higher. But right now it looks like we're going to see a pullback, and you want to see that when you get these big price moves. And there's plenty of support here right in the mid $34 price range. All right, let's move on to now into silver, which has gone on a huge rally price-wise coming out of this in mid-December all the way up. And what do we see? It's just been trending along the RSI. It got down here, oversold back in December. No big deal, because it went on a nice move. We talked about in part 1 the equity piece having not a lot of momentum behind it. This is beautiful because you saw the momentum building, oversold. So that means people are just backing off positions. It's not below 40. It's sitting at 51. So this is a good number, good place for it. You've got a crossover on the MACD, moving downward through the signal line. But again, the MACD by itself is not a perfect signal. It doesn't always tell you what you need to do. That's why, again, you got to look at multiple signals, and that's one of the benefits of Momentum Timer Pro, helping us out here, kind of balancing out what we're seeing. So a little downward pressure on the moving averages. Momentum Timer Pro 22nd consecutive buy signals. So again, 2 out of 3 confirming, meaning Momentum Timer Pro's got a buy signal on it itself. Price is bullish across the moving averages, and momentum is still building as price moves higher, just below the 21-day moving average. So that's not terribly a big deal for silver. And let's take a look at the silver futures here and see what's going on. We talked about this before, how if it broke through this supply zone and this volume profile, that I said it was going to get up here to the 27. And guess what? It did. It got up here. It got rejected where we should see it, where the sellers are at. This is a supply zone. Now, what do we want to see if you're bullish on this is you want to see price come down and reconfirm. So this is good. And actually, if price came down a bit more in silver, you should actually be pretty excited about that and want to buy in. So look at this. You see the volume profile on the 1 year supporting where the sellers are at above. But notice you've got the 50-day moving average coming up across here right above this, right into the supply zone. So what this suggests, if we go now out to the 6-month chart, is you want to see actually price coming down and tagging this 50-day moving average, which should be somewhere right in here around the close to the mid $24 price range, and that would be constructive. Let's zoom in a little bit in the 90-day, and you can see buyers well below, so plenty of support there. How about the 30-day window? And you can see, kind of get a picture now that people are selling above this price point, suggesting it's going to come back down. And let's look at the 10-day and see where that's telling us sellers above. So again, constructive move for silver to come back down, find some support against the moving average into this volume price zone right here in the mid to low $24 range. And that looks good. That's where you would want to make a re-entry point. So if you're not in it now, or if you're looking to, or if you're in it, tighten your stops and then be looking at that price range to see when we get some signals to tell you to jump back in. How about the dollar, which could be, of course, we talk about the wrecking ball to everything is a strong dollar, and it's building momentum for sure. We see the RSI, this thing, didn't get to oversold conditions back in April and May, but it's been building momentum steadily across the RSI. Not a lot of people don't like the dollar. They're not interested in trading the dollar, but look at this nice move higher, and it went a little bit of overbought here in November, a little bit of overbought here early March, but still RSI is showing this thing's strong. We have a signal at 55. How about the MACD? Just a bit of a crossover here. Maybe it's getting ahead of itself and it will come come back down a little bit. We'll look at the charts in a moment, but we see the black line now, MACD crossing through the signal. Momentum Timer Pro must be conferring with the RSI because we've got 19 days of consecutive buy signals showing that momentum is still good on the dollar. How about the longer term trends? Price bullish across the moving averages, so they're all rising. Momentum only bearish on the 50-day, but we've talked before, the 100-day is more critical to the dollar, sitting below its 9-day moving average. Not a terribly big deal in terms of looking at the moving averages. So let's zoom over to UUP, and what do we see on the 6-month chart? We see that beautiful 6-month volume profile that for a while, for many weeks, I think even a month, we were looking at that saying, wow, the sellers are really aggressive above there, driving price lower. Well, it turned out the buyers were the ones who won that battle. You look at the last 90 days, buyers clearly have support now below. We'll zoom into the 30-day, and you've got buyers well below. This is all things you want to see. 10-day, you've got buyers on the bottom side. So again, this is all stuff you want to see. Let's go out to the 1-year chart, and you've got buyers there. Let's go out to the 2-year chart. You've got buyers below. So again, dollar has momentum behind it. And what are you seeing? Price gets up into a supply zone, and what do we know this one's called? Is a sell zone, right? Because we see this is where sellers have been at. They're at before. Price comes down. It's hitting its 21-day moving average. It could come down lower. Could come down to this $26 price range. Pick up the 50-day or the 100-day moving average as they're rising. Or maybe there's enough buyers here in this zone below. Hard to say for sure, but let's zoom out to the 5-year chart, because what happens next if buyers can keep moving the ball forward up here? Well, you've got $27 price range in the zone for the dollar. On DXY, now you're looking at $100 on the dollar. Financial conditions get really tight there. So yeah, I would not be surprised if we're looking at DXY. You can see this thing coming all the way back down, maybe around 97, high 96s as the moving averages rise. But notice how it tags that's the 100-day. So the 100 days coming up, and watch out for that. All right, let's move on to deferred dollars. Of course, we know Bond King loves duration. We've got the iShares 20-plus year Treasury bond TLT, RSI over 40 at 42. It dipped down below there briefly, but it's kind of, the momentum's not real strong here. It kind of got a little bit of lift, and then sellers just hammered the price back down. But perhaps this thing is sitting so far oversold in these weak conditions that maybe it's going to get some momentum behind it. How about the MACD is starting to turn up and looking like it could cross over early into next week, and that would be constructive, pushing the help push the RSI higher, help turn and bring some buyers in. And we know it's a long, it's something like the equity from part 1 of today's show is it's kind of weak, and now all of a sudden maybe we find some buyers as it's just heavily oversold. Momentum Timer Pro's got 6 consecutive sells. We would note that it confers with the MACD in this case. And let's take a look at the longer term charts. Price is bearish. Momentum still amazingly still bullish through all of this. Below all the key moving averages, all the momentum screens are negative. So that's usually what we're looking for in a price reversal, is a lot of red. Let's take a look at TLT all the way down here. We've got 6-month volume profile above it. That's not the story. It's the 10-day. So now starting to put in a bottom right here at the 10-day volume profile. Wouldn't be surprised to see sellers try to push down on this in early trading next week. Wouldn't shock me at all. But if this holds, this 10-day volume profile holds, then it's got some momentum to move toward the upside. And we see that MACD crossover. That will bring some people in. And next thing you know, you've got TLT into the 134 potentially now. It's got to make a big run to get back up to 138. It's just got to get a tailwind here. So maybe a little early to call. Keep an eye on Momentum Timer Pro if you're on the EML list, and it'll let you know when to take a position. How about we move on to the energy sector, something that's been overbought for a while, but continues to go higher. We see overbought back in October, in January, in February, and March, and people would get nervous. Anytime the RSI comes down, they jump out. But remember, it's got to get through 40. That's your signal, and sitting at 56. Last time it got down here, bounced and shot higher. How about the MACD? We got a crossover to the downside. Remember, those who just trade the MACD, Well, they jumped out mid-February and then chased it back up when it crossed over. So, again, you got to look at multiple signals here. And of course, if you're looking for momentum timer pros, call. Well, you already know one of the two is confirming. So we'll see what it says. You can sign up again, see the report on Monday. Price remains bullish across the moving averages. They're trending higher still. Momentum starting to slow down on the 100-day. Usually we want to see it slowing down on the 21-day, 50, and then 100. So look, trend is looking still pretty good on XLE. Let's see if the volume profile is telling us anything. 6-month volume profile, you see down here providing support. Moving averages are moving higher. Here's the 100-day. It's slowing. What's happening is starting to slow down. Let's zoom into the 10-day volume profile. Note sellers are above. There's your red flag, potentially suggesting that energy is coming back down. It's got support on the 30-day window at 68.50 and change. And how about the 90-day? It's got plenty of support below. So look for perhaps a pullback in the energy sector down here into the 68.50 range where it's got some volume support. See if it holds there. That would bring it through the 50-day moving average, which could be dangerous. But keep an eye on that because energy, at least if we keep watching the inventory builds, could be kind of in trouble. All right, with that, hey, thanks for watching. Thanks for being fans. We'll see you back soon. Bye now. The content of this video is private, educational information only, not intended to provide investment advice. This will not to be construed as recognition or solicitation by selling security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre, personal capacity. Opinions expressed this video that do not affect the value of Steven Van Metre Financial.